minutes. Someone's, I guess the meeting's being recorded, right? I guess that's typical. Yep, okay. So the first item on the agenda is the minutes. They've been sent out earlier from the April 7th meeting. Is there anybody that has comments that haven't been shared yet? Or if not, we can seek approval of the minutes. Okay. Great. Sounds like we're all in favor. The next item on the agenda is the discussion of the preliminary audit plans. The timing, whether we're going to be doing it from a distance or sort of on site, any other issues we might be dealing with. And I guess it'll be a combination of Linda, Joanne, and Joe. And who's going to start off? Joe, you going to start off with Linda or?
Sure. So we plan to do as much as we can on site. I think we're scheduled July 1 for our kickoff, our planning meeting with Linda and Joanne and Joanne at the Board of Ed. So that day has been confirmed. So as much as Town Hall is open and Board of Ed is open, that we will plan to do a lot of it on site. So there may be still components that get done, transaction work and that type of thing, but it'll be probably not quite as pre-COVID on site, but it'll definitely be much more than last year. It'll be somewhere in the middle expectation.
Joe, any change in scope, any anticipated issues?
There isn't really any change in scope. I mean, we'll be looking at the coronavirus grant, the CARES Act, and then the American Recovery Plan. Again, that's kind of at the beginning, so not sure that there's going to be as much expenditures for 2021 for that type of grant. So our recommendation is when it comes in and wherever it gets recorded, whether it be special revenue or capital, because most of it's allowable capital. There are some operating type costs allowed, but it would just be cash and unearned revenue until the time and point that projects are approved and allowable expenditures are incurred. So we're not expecting, again, for 21 that to be an impact, but definitely in 22.
So we're going to have a chance to discuss that later. So maybe we can get into detail on that later when Linda presents. But anything else you want to cover? If not, we'll go to Linda or to Joanne.
No, the highlights. I said we'll have, the next meeting we'll have more reported. We'll actually get started with transaction work right now, or get remotely, or at least selecting and that. But our kickoff planning meeting is July 1 on site.
Great, thank you. Linda, any comments?
No, I think what Joe said is on point. There is about $3 million the town will be receiving this fiscal year for the American Rescue Plan funds. And I was on a call yesterday with OPM and other finance directors, and the discussion was we probably want to designate it and put it in a special revenue fund or a grant fund, just so that we can track how it comes in, where it goes, the portion that we would be using to replenish lost reserves. We would do that by way of transfer, but that way we can audit that fund easier if it's in a designated fund, and we can follow the ins and outs.
Is there anything special in this accounting that we should be alerted to, or is it going to pretty much, assuming we get the money, pretty much follow the accounting we've used in the past when we've received grants from the state or reimbursement from the state?
It will be similar to the grants. Joe, unless you've heard anything differently, I haven't seen any additional guidance. I know that they are going to track it. We have 2 years to spend it, so it's not like a typical grant where some we get reimbursed after we spend it.
This is the schedule you sent.
Yes, and I'll have some updates on it.
We'll talk.
But that's
revenue, right? So it's like lost revenue.
Right.
So therefore, you get the revenue, and it's just
right. You get the revenue, and it goes to replenish your general fund, and you have a budgeted general fund. But there's a portion of that will be non-revenue, and I'll talk about it.
That's what I was. We'll talk
because there's 2 buckets.
Okay, Joanne, anything you want to add at all, or just pretty much the same?
Is that,
Are there any accounting changes, any new accounting rules or anything like that that are?
the new accounting rule that's effective for this year is GASB 84, which deals with fiduciary funds. So we'll have to look at, most likely it's not going to change reporting in any defined contribution plans, any 457, or we have to evaluate them to see if they're, what the town's involvement is. It may push them into the audit report like the pension funds. So that's the only thing that's effective for June 30 this year is that evaluation.
What was the number again?
84.
Okay,
Okay.
so I think
Oh,
we're ready to move that.
Yeah,
We're ready to move to item 3, or?
and we're gonna kind of combine 3 and 5 in the same.
Okay. Okay, so why don't I just, the presentation, Chuck, it's probably a little bit easier if you manage the presentation with Linda, Joanne. Now, I guess we'll start off with Linda.
Sure, so I shared with you, let me see, where did I start?
Could you get a little closer to the microphone? I'm having a little bit of trouble just picking up on it. Great, thank you.
Yeah?
Is it on?
That microphone is just for amplification, that's not.
Oh,
There you go.
Right.
can you hear me?
Now I can hear you much better.
We're still working through all of the.
Yeah, no, you're doing well. Doing good so far.
There we go. So let me start with, I did share with you May financials, and that was an email I sent out later in the evening. And if you have the handouts, it's on page 28. Starting page 28, yes. Actually, 27 is the first page.
So what do you want us to look at?
Just look at the, when did you send that? Did you send it to everybody?
Yes,
So.
that was the email I sent yesterday as soon as we finished the make numbers.
Yep.
So the May financials.
So revenues are tracking where we would anticipate them to be this time of year. Our tax collections are about $1.1 million over what we would anticipate them to be, which is in line with our tax collection rates. Our prior year taxes are trending well. We had budgeted $250,000 as of May. We were at almost $700,000 in back taxes. Our building permits this year, not knowing how the year would be, especially following COVID, we had lowered the budgeted revenues to $830,000. Currently, we're at $883,000, so we were pretty close to where we thought that would be given all that's happening. Our conveyance fees is actually where, as you know, with what's been happening with the real estate, we had a budget of $1 million, which was a slight increase from the year before. Right now, we're almost at $2.5 million in back tax collections, and so that's a positive story. And it is helping making up the lost revenue from parking, which is one of the major revenue drivers in the general fund. Our parking revenue was budgeted at 1.3 million year to date. We're only at about 230,000, which is less than the 570,000 the year prior. And therefore, that over collections in conveyance fees is making us whole.
It's fortuitous, isn't it? Yeah. Certain Walden would accept the short.
Yes, it does. It does. So that's kind of where we are with the revenues. On the Board of Ethics grants, we did receive as budgeted by the state. There was no holding back any of those fundings. On the expenditure sides, again, we're consistent with where we'll be. I'm on the second page of that report. Year to date, we're at about 85% of budget with about a month left in the budget, which is consistent with where we would be. This year, you'll recall that after the budget was adopted, we did 2 special appropriations. We did one, almost $1.5 million for the Board of Ed operating budget. And then we also did an additional $1.9 million last month for the Board of Ed Internal Service Fund for health insurance. And so those were budgeted to be drawn down on the general fund, and therefore this is post-budget. And that's why when you look at how the end of year is going to happen, like most years where we come in over, this year we do anticipate drawing down on the fund balance and stuff, but that's by design. It's because of these policy decisions that made throughout the year. But other than that, unless there are specific questions.
So just small point, just back on first page. I mean, it's a small number, but it stands out because of the percentage. The legal fees, which are running 173% of the budget, 519 year to date against budget of 300 for the year. What's behind that?
There are a couple of things behind that. We've had some additional work this year related, obviously every year, related to what do you call it? Assessment appeals and research related to that. But we did have, we've had some legal settlements also for employees, and therefore what we do is we typically budget on an annual basis $300,000 for that budget. And then any additional, any overages, we would use transfers from the contingency fund, which is what we anticipate doing this year. But the major drivers are the same.
No special big case or anything like that.
From the,
Big, but I mean, there was a personnel.
Well, it's one, there was one.
Yes, there was one that was in the newspaper and whatnot, so,
I can tell you. I now only know what's in the paper, but there was a second.
but yeah, so that's the driver.
You don't have to discuss. Thanks.
from the standpoint of both the town and even the Board of Education, what do we do to maximize revenue opposed to not maximize revenue, I guess. So for example, I just became aware, only because someone mentioned it to me for a whole different purpose, that this may not be correct, but I understand that relative to the town pool, that there are so many people that want to use it that we actually have a lottery. And it would seem to me that the taxpayers would be better served by eliminating, if what I heard is correct. And I think the lottery is for maybe non-residents, or maybe even residents, but certainly non-residents. And it would seem to me the taxpayers would be better served by pricing it to a point where the demand equals, the availability. And who's in charge of making sure in each area that our pricing is at the right level? I realize that in certain areas that could be, good humanitarian reasons why we wouldn't want to increase the pricing. But it would seem to me in the town's swimming pool, that might not be one of the areas where we would want to, have lower prices. But who's responsible for say? Let's just use the swimming pool as an example. The pricing.
Well, each year, as part of the budget process, the charter requires that the Board of Selectmen review our fees. And therefore, we go through the process and we have department managers come up with recommendations. They look at things like what's the market, what are other charging, what are people charging, and at the same time. So I think it's a balance between generating the revenues and also having an amenity for the community.
Well, maybe we want, maybe it's, it'd be a small amount of money vis-a-vis the overall mill rate, but maybe, we could just take a look at that overall to see how many areas we might have. I know in the Board of Ed, we probably haven't done a lot of this in the last couple of years, but at times the buildings used to be rented out for use, right? If I'm not mistaken, Joanne, the auditorium or others, and what's the usage fee there? And, have we looked at these things? I'm sure we look at them every year, but, do we have them at the right level given today's pressure on cost and revenue?
Bill, I think Kevin might have
Bill, I just wanted to, is this live?
Yeah.
Bill, there is no lottery for the pool. Last year, because of COVID, we did not allow non-residents. I don't believe we're allowing non-residents this year. So the demand in town is being satisfied. And as far as Linda mentioned, every year the code requires us to have the board of selectmen review at all fees. So every department manager wrote a memo outlining all their fees when they were last changed, justifying any increase or not. So we do address that every year. It's part of the budget process.
Good. That's good. I was, you may want to take a look at the, did you say non-residents, the pool is full with just residents?
Yes.
Yeah, okay. All right.
Oversubscribed.
Yeah.
There was a period when.
We needed
it out a couple of years ago, but that's, not current.
So.
Yeah, I just made other information, but no problem. Yeah, Joanne, it's it's more of a philosophical question, but how do you do?
Yeah, the pool is an enterprise fund, and actually, once they pay off their bonds, we're going to go cash flow positive with the pool, so we probably would reduce the fees rather than increase the fees.
Really? For non-residents?
No, not for. Yeah, we have plenty of demand for residents.
I mean,
that may change next year. We go back to normal, but
whole new level of revenue sharing.
I don't do it based on supply and demand.
Reminds me yesterday. Okay, a little hard for me to hear, but I just, I guess I would. Well, we'll just do it offline. That's fine.
I said you have a pool on your mind.
Yeah, I had the pool on my mind, right? Exactly. Joanne, you probably haven't rented any rooms out in the last certainly 18 months to 24 months, right? But I mean, that's something long term. I'm sure you have on your radar screen as well.
Right. So we have the same situation on the board side. We have more demand than we have availability for the facilities. Of course, this past year, we have not rented out our facilities due to COVID, but we'll be getting back into that as soon as we can. And our buildings, especially the high school, are widely used by the community. So it's the hub of the town for the kids. And we do review our rental fees every single year. We have a policy we established about 5 years ago, and we revisit it. Of course, there's a lot of pushback by the youth sports that we charge too much sometimes. And so we have to strike that balance between bringing in revenue for the town and being reasonable for the families.
Yeah, you should look at really increasing those fees a lot, because I heard there's a big demand for meeting space in town.
Yes.
Okay, Linda, I'm going to turn it back to you.
Sure. So the next discussion was related to COVID and COVID. Do you want to go to COVID and COVID reimbursements? Sure. I provided on here a schedule, an updated schedule, and that we reviewed, and Joanne, her staff, looked at it yesterday and kind of gave us an updated numbers, just to give you a sense of where we are on COVID reimbursements under the existing plans. And then we also have some new funds that I'll talk about that are related to COVID. So I did send you a separate sheet that had COVID numbers and COVID information. And should be. Yeah. What's the title? What do they call it? COVID reimbursements. If you look at the documents I sent Friday,
Is that in your package?
it should be in this package as well.
What is the title of the attachment?
It was COVID reimbursements.
copies quickly?
No, doesn't mean it wasn't there.
Doctor's gonna take some time.
Doctor's gonna- So while we look for that, let me talk about the American Recovery, the American Rescue Plan, and then we'll get to that. So this is the new, and there should be a sheet that said American Rescue Plan. Do you have that? Bill?
Yes, I certainly have it. It's item 4 on your, that you
Yes,
sent out, ARPA update.
Page document.
two-page document, it's on page 58 of the.
Yeah.
So maybe let me just kind of walk through that and then we'll get back to the COVID. So this was the legislation that was signed earlier this year. It took a while to get all the procedures and process in place. We finally got some guidance last week from the Treasury and passed down to the state. And the past week, the state has been having a series of meetings, including one we had yesterday, just providing guidance and how we can access these funds. So the funding that was sent to the state was sent essentially in three pots. There is a pot for communities or cities mostly over 50,000, and they get this money directly from the Treasury DC, not through the state. The second group are communities like ours under 50,000, they refer to as non-entitlement units, NEUs. And that funding flows through the state. And so there is a state process in place that allows us to access those funds. And then there's a separate pot for education that Janet can speak to as well. So for the portion that's coming to the town of New Canaan, they grouped it basically based on population. There was a dollar amount that was assigned to the city based on our population. So our town portion of that was a little over $2 million. And then because Connecticut is unique in that we don't have formal county governments, there was $3.9 or $4 million designated for Fairfield County. And the Fairfield County portion was distributed to towns within Fairfield County based on population. So New Canaan is about 2% of Fairfield County, so we get about 2% of that Fairfield County pot, which is that 3.9. So you add the 3.9 plus the 2 million, you have a combined 5.9 million for the town of New Canaan. The way that this is distributed, we're
That's the potential amount.
it's the actual amount.
Actual.
It's the actual amount. So we are gonna get 5.9
You're gonna
million.
get that.
And so the way that the state has set up its distribution is they're gonna do it in 2 installments, tranches. One is before June 30th, 50%, which is about 2.9 million. And then the next installment, you get 12 months after that. And the way that they're providing this funding is you get the funding up front, like a grant, and then you have 2 years to spend it down. Presumably, we don't have the full guidance, but presumably, whatever you don't spend within the 2 years, you give back if you haven't spent it. And so with that, they've provided guidance on the things that you can use this money for. And so I highlighted those in those 5 main areas. The first area is you can use it to support public health expenditures, and these are new expenditures. This is not going back, it's not reimbursement for things that you've incurred expenditure-wise. Those were funding prior to that, the FEMA and the other recovery funds.
What's the cutoff date for that?
Cutoff date for the full usage of this, or?
For new versus old?
I asked this question yesterday. I believe the old we go through June of this year with this FEMA, and the old, it's really complicated. So the old had 2 pots. They had what they call the CRF, the CARES grant that came through the state. I believe it was, I forget what the total amount was, but they did the same thing initially. Initially, there was a pot of money designated and each town had an allocation. And initially the instructions were, you can access, I think it was for, in our case, like 300,000 or so directly from the state, but they wanted you to apply the balance through FEMA. FEMA was only going to reimburse us 75% of the expenses, and therefore what wasn't reimbursed by FEMA, you could go back to the state and get that. It was extremely cumbersome because they were asking for requirements from FEMA. FEMA wasn't moving at the pace, and therefore they kind of modified that approach, and they basically said, whatever that you haven't tapped into, regardless what FEMA gives you, we're just gonna allocate it to you. So the CARES money was distributed to the towns 100%. So we got all of that, everything that we could have received from CARES, we got from CARES. And the town got about, I reported this, just under 300,000 or so between the town and the Board of Ed of the CARES money. And then the balance of the funds we were to get from FEMA, we did receive an award letter this week. We have about 160,000 that we're going to receive from FEMA, and this is reimbursement up through December of 2020. We have about another 230,000 or so of expenses between then and June that we're also going to get from FEMA. So this is separate from this $6 million that I'm referring to. So there's a lot of money moving, but in addition to, there's about 300,000 outstanding that we could still possibly receive from FEMA. We are also getting reimbursed for that big storm, Storm Isaias, that happened last year, and we lost power, we lost internet, if you recall, and whatnot. So we've put in about 550,000 of that, and so these were direct expenses, overtime, cleaning up trees, personnel costs, and all of those things, and so we've submitted those. That's being reviewed, but there is about another 500,000 reimbursement that the town incurred for that. That's also coming, and I believe that's on the sheet that Tucker just shared. So that's where we are on the old ones. And so this money, the $6 million, is separate from this that I just updated, and therefore this is not intended to reimburse us for those past expenses, but it is a way to stimulate the economy and give us funding to initiate some new projects, and they categorize what those new projects could be. Investment in public health expenditures, including economic harm to workers or households. You could use it to help small businesses, but it's really up to the local communities to make a determination how these funds are going to be used. Kevin asked me to follow up with other towns just to see what they were doing. I've got some preliminary feedback. Some communities are leaving it up to their town councils to have the discussion. Some communities are planning to hold town hall type meetings similar to what you do during the budget process to do a needs assessment. Some communities are empowering their economic development departments or programs to determine what are some existing programs that could benefit from these fundings. Some are applying these new monies for capital projects.
You are now telling us things we have never heard before.
Oh, I apologize.
Never seen before, never got any preparatory information before. Is there any way that you can send us something, bring us up to date on what's happening now?
Sure, I sent a 2-page document, which is really the most information, the most
This one
recent
here?
information, yes.
Yeah, but what you're telling us now, I'm having an awful lot of trouble relating it to this, correct?
Correct.
Yeah.
And what you're saying is how, because this is conversations you've had since this, about
Right.
how other towns are going about deciding which of these 5 or 6 items
Right.
are we going to spend the money on.
So, yeah, so,
Kevin, any thoughts, or maybe Linda covered, but any thoughts as to how we might do it in New Canaan? And, the other thing is I would encourage whoever's going to do it to really understand, what benefits businesses or individuals or others who we would consider giving money to had gotten from other sources. But is there a process that we have in the town yet for the money we're going to get? And I know, Linda, you've reviewed what the other towns are doing, but have we made a decision?
let's do it tomorrow.
No, we just got this last week finally from the treasurer, so we're just beginning to relate to it.
So to answer your question.
It's a tough process, a tough question, right? Because particularly if we're going to, pass this through to allocating it amongst the departments is always would, by itself would be a challenge, but if we're going to, which I inferred, if we're going to give it to, potentially give it to members of the community, whether they're residential members or business members, that presents a whole new question, right?
Yeah, but, Bill, the good news is that other than retail, our restaurants had a great year last year, so.
Yeah.
In terms of some of the nonprofits could use some help, so I think nonprofits will be a focus. And the other thing, our number one priority right now is our commuter trains. And we're trying to address how we're going to get the Metro to restore the commuter trains. Without commuter trains, we have no commuters. So.
Right. Yeah. Okay.
Briefly,
It's a good problem to have, right?
Yes.
we got, call it 6 million, okay? Yes. One of the things you can use it for is to reflect revenue, and your table on page 2, we've got lost revenue projected at 3 million. So it's the other, we could say 3 million is for that, and then the other 3, we figure out.
Right, and that's to your point, Chuck, because what most communities are doing is, because it's too soon to have these new programs, and there's a 24-month period to kind of come up with these programs and so forth. So what most communities have done, and the Government Finance Officers Association also put out a tool to estimate, is most communities have begun the process by saying, we've lost this much revenue, because that is an eligible use of these funds. And therefore, for the past. And so they went back, and the calculation is to go back pre-COVID, and in our case, the full pre-COVID year would be fiscal year 19. And so they ask you to identify revenues that were impacted due to COVID. And in our case, we were able to identify, obviously, we've talked a lot about parking revenues that were impacted pre-COVID, recreation revenues because of recreation programs being closed. We have a couple of smaller funds, rental properties, the movie theater and the whatnot. So we identified those 5 revenues that were lost due to COVID. The way that the federal program has estimated is, you go back pre-COVID, they had an increase rate of 4.1%. So you assume it would have grown 4.1%. What did you actually receive? And the difference is how it computes to that lost revenue. And that's how you get to that $3 million.
So they tell you kind of how to.
So yeah, so they kind of, so that was the guidance. And therefore the initial tranche that we would be getting by June 30th is to compensate us for the lost revenue due to COVID. And then moving forward, we have to determine how we would use the additional $3 million on these new initiatives that Kevin kind of outlined. That's yet to be determined.
So you would expect that this actual schedule?
Yes,
And so you would envision that gets sent in tomorrow
it was sent in Friday.
or whatever?
Yeah, so we would, and so before June 30th, we've qualified to get the full half, the 2.9 million.
Then that's it for that. So then.
And that's it for that.
So
And then
you're
now,
dealing only with the other 3 million or whatever.
correct.
And that's what you need to figure out.
Correct.
How best.
And this is giving you, this is like within the last
Yeah.
72 hours or so. We just now got
So
it.
it's pretty quick.
So it's pretty quick.
So what do they require by the 9th? That's just his revenue schedule?
Not even the revenue schedule. They just want you to have a sense of what you believe your revenue expenses are. They don't upfront. They're actually not even requiring towns to submit project requests. I'm not sure how other towns have projects in place. Like if you
So
didn't,
they're just gonna send you the 2.9.
they're going to send you the 2.9. Yeah, so they're going to send 2.9, and you have to determine how you're applying that 2.9.
So this will be something that will be a process set up.
Right, I would anticipate would be through the budget, and that's what, as I mentioned earlier when Joe was talking, I think we want to set up a separate account for these funds, just to be able to track where it's going, how it's being applied.
I believe the Board of Ed is also getting money. Trying to address that.
In addition to.
Yeah, in addition.
Yes.
From the same act.
Yes.
So if you take a look at the exhibit that Linda put together, some of the grants are here and some are not. So the grants that are reflected here are
So we-
Those are tougher.
this exhibit here.
is this the thing that just got passed up?
Yeah.
Is that something you could put up there?
I'm having issues logging in. Our IT, we switched to dual.
Because you're up there, right?
I'm up here on my phone, but I cannot log into the system.
So that's a picture of you, right? Oh, I see, it's your phone.
We have a new security platform. that
We have a new
just
security
installed on
platform, and this is the
Monday.
first time logging on using that platform, and
Were you able to send that to Bill and Ed?
You send me an email copy. If you send me an email copy, I'll get it, or a text if you can. If not, we'll go through it. That's fine.
If you could. And Ed, you want that on your personal, your Ed Kangas email?
Yes, I do.
If you have that.
He's got 3 devices.
yeah, here's the.
So Linda, this second half of this page, which is titled eligible uses of funding. A list of about 5 eligible uses.
Yes.
If we can select one of these, can we apply for reimbursement just for one, like loss of revenue, and not worry about all the other ones, and not give a damn about health and things like that?
We could. I think the challenge for us is we don't have $6 million. We haven't lost $6 million in grants. We've maxed at 3, so we have to determine.
Just a question, if they go the other way, you have to subtract it out, like your conveyance fees.
Oh.
Just a question.
That's not covered. Spoken like an accountant. No.
Okay. Everybody always goes in one direction, right?
But it is going to be a challenge because these are new monies, new programs. We haven't thought about how to spend $4 million that's coming our way. We haven't had time.
But this is a real opportunity to go through this discussion and figure out.
Yeah.
What you.
It's all brand new.
So did you send that?
Yeah.
So while Lou was taking care of sending that off, I would just state that the Board of Education is very accustomed to living in this world of grant funds and the way they flow. We receive 5 DEA grants every year from the federal government that are 24-month grants, and title grants from the federal government that flow through the state. And this is very similar in terms of the mechanics and having it to be used for very specific purposes. The thing that's different about this is these are emergency funds. So the first wave of funds that came in, which was the CRF and ESSER 1, we were able to reimburse ourselves for unanticipated expenditures. And that's what we did with those 2 grants. The sum of both of those are the $250 that is on this list here. And since then, we've been advised that we have 2 other grant streams coming in. There's an ESSER 2, which we've applied for and been approved, and that's going to be $460,000 plus. And then we have the rescue grant as well, which is slightly in excess of $1 million. For us, we have a different type of criteria, but criteria nonetheless. There's 4 categories that we have to confine our expenditures to. One of them is educational access, which means, do all kids have access to their education, whether they're in school or out through remote learning? That's basically technology. We have a goal also there, a requirement for filling the learning gap. We have, and we're fortunate, we've been in school almost all year, but the tail end of last year when we were home really put some of our students at a disadvantage because they didn't have access like many of our students do. So this summer, we're running an Achievement Academy at South School for about 50 to 60 students so that we can take them in and out of the school. We're going to transport them back and forth. We have our teaching staff that are coming in. And that, hopefully, the goal of that program is to narrow the gap of where they are in terms of their learning. And then we finally have two other categories, professional development for our staff, which we had to invest significantly in this past year in order for them to know how to actually use all the tools that we gave them and be able to teach our students in a hybrid mode and remotely. And then finally, health and safety, which is something that we've spent a significant amount of money on in terms of cleaning and other mitigation strategies. So we put together a plan. We knew these were the 4 areas that we had to abide by in terms of the $1 million. And we have yet to set it to the state, but we will be doing it within the next few weeks. So in total, we can expect about another $1.5 million on the school side.
So is there, like, we look at this and it's got the 5.9 million. Is there a similar amount that you're gonna get?
Yeah, we are going to get $1 million on our
$1
side.
million, then you have to support.
Right, those 4 areas.
Those
Yeah,
4
just support.
areas you need to eventually support the expenditures on that.
Right, we have to have programs and expenditures to actually receive the reimbursements on it.
And I believe when you, in the past, Joanne, all of these areas get audited after the fact. Is it 100% of them get audited, or is it done on a sort of a random basis? In other words, have you spent the money that you get in accordance with the?
And Joe has a schedule, O'Connor Davies has a schedule where they take the Board of Education grants and the town grants.
Right.
And they use the Single Audit Act of the federal government. Some years the town's being audited, has that in-depth audit, and many times the Board of Ed does,
Right.
especially for IDEA. But Joe, you can speak more. I don't know if you have the guidelines yet for the rescue and the ESSER and the CRF.
Joe, I heard yesterday on the OPM call that that these funds are automatically fall under the single audit. They must be audited, regardless of the dollar threshold.
So it may be, maybe a little late to do this, but just, as I was reading through the eligible uses of funds, so maybe just philosophically, how do you identify, in Joanne, your case, the 1 million and the 5.987 million to the town? I mean, is that fundamentally you've got to go through and understand just the philosophy of what the law says is that this is money that you have to have lost, or money that you lost revenue or additional expenses?
It's
That's
additional expenses for us on the board side. Our grants flow through the State Department of Education, and they control the approval of how we spend our funds, which is different than on the town side. The town has a different process than we do at the Board of Education. But we
Yeah.
do.
But then because you're eligible to use the funding, if I'm reading this correctly, maybe in a different way than we accumulated what the funding should be, right? So we presumably could give the money to an impacted industry, let's say the taxi cab service at the train station, if we wanted to. Is my reading this right? That on one hand is sort of what we've lost or haven't incurred, but then we could spend it a different way. And I guess the reason I'm asking that question is, what about if we went to all the small businesses and found out that every small business in town, had a significant reduction in profit? We can't put that into this?
You could. We would have to create the program, but that's an eligible use. And so if we had a townwide program where we were helping out businesses that had lost whatever due to COVID, and we had a set of criteria, a maximum amount, they would go through the process of application. That is an eligible use.
So we have, so that none of that is included in the 5.9 million?
No, all the 5.9 million right now, the only thing that we've identified is $3 million in lost revenue. The balance of that, we have not identified the use for.
But that's the town's lost revenue.
Correct.
Yeah, what I was getting at, if I'm reading this correctly, you could help the small business. And I was just wondering if I am reading this correctly, that eligible uses of funding is to address the negative economic impact caused by the public health emergency for a number of things, including impacted small businesses or impacted industries.
If I may jump in, Bill Tucker here. Part of my role as administrative officer is to take some of my time with the Chamber of Commerce and combine that into some economic development advice over here. And one of the things that we've planned right now is next week, I believe, we've assembled a group of commercial real estate brokers to meet with us, to advise us on what is it that could be providing them, whether it be marketing material, is it data analysis, is it some tax relief, whatever it may be. And this will be part of that conversation so that they can tell us what are some of the hurdles that they're finding that people may be deciding not to open a business here, or what do they need to survive. I can say though, in hindsight, after this weekend, I was hearing that downtown is packed. Our local dry cleaner told me that he has 400 new customers in the last 7 months. So we're almost now at the tipping point where I'm starting to hear people say things are too busy. You can't get into a restaurant and all of that. But the retail sector is the ones that really need, and the economic development piece is something that we're focusing on as part of our TDAP responsibilities as well.
Bill, I just
Yeah,
want
no,
to, Bill, you weren't asking for who needs help or support. You're just asking for clarification of the thing. Can you do it if we chose to?
well, and also, is there a way of, if the need for support was, let's just say, pick a number, $8 million. Can we put that into the program we're requesting in the way of funds? I do, because or is the amount of our request limited to our lost revenue? That's my question. Is the amount of the request limited to our lost revenue, or can we put, if we wanted to create a program to help small business and just pick a number, it was going to be $8 million, just to use a different number. Can we put that into the request for the federal government?
Right, so we have a total of 5.98 million. That's our total allocation. And we can create programs that we think are befitting of spending $5.98 million.
No, I understand that, but what I'm getting at is, why is the 5.9 million our total program? Why can it not be a higher number?
It could be,
You could go above that.
We'll be spending.
but we'll be spending our money because we're only getting 5.9 million.
Why?
Program, the max is 5.9.
The max is 5.9 million.
So we could spend more, but that would be our guide.
Because it's based on, it's an allocation. The state got X amount of dollars, they looked at the population, and we got 5.9, Greenwich, I think, got maybe 12, Norwalk is getting 40. It's really based on population. And then we, I think it's 40, and that would be a lower number.
Okay. So this is what's being allocated to us at this point. That number can't be higher.
So you'll have a process
Good.
set up to come up with how you.
That's
can
good. I got it.
3 million and appropriately have the approvals and everything.
Yeah, as I mentioned earlier, probably nonprofits are the one area that became, otherwise, New Canaan has a population that people have been working remotely, getting paid, so the impact on New Canaan hasn't been great for the most part. But these are designed to be recovery funds, and the one thing you cannot do is reduce your taxes. They want you to spend this money productively, so.
And that'll probably be a similar process to the budget. Selectmen and the Board of Finance.
You talk like.
No, I'm just agreeing with you,
Yeah.
Kevin. I mean, we're at the start of a process, it'll be like a budget process.
Right.
Input from various
And
parties,
actually,
boards,
yeah,
and
and
town council.
We'll work with the Community Foundation and other, local groups that can help inform us as to where the needs are.
Move along. Does everybody have this?
I just emailed it, yes.
Do you have this, Bill?
Yes.
I can share this now.
Okay, he has it, so I think we could just talk quickly, because we probably already talked about a lot of it. Oh, yes.
No, so basically what that sheet does, it just tracks where we are with COVID expenses, what we spent last fiscal year, what we spent this fiscal year, and where we are with the reimbursements. As Joanne said, if you look at the Board of Ed side, they have noticed that there's some additional funding that's coming through on their end, and as I shared on the town side, you see at the bottom, we have about 460,000 in storm expenses that have yet to be reimbursed. There's some indirect costs, and so we're looking right now possibly getting 530 or so. So we look to be getting fully reimbursed for those expenses. And then on the FEMA side, right now, we're at about 160,000 or so of expenses that we've turned in, and there's possibly another 230 that we anticipate getting reimbursed for. That is total expenses. As FEMA goes through these, they make a determination. Some of these expenses, they say they're not eligible for reimbursement. And so what we were tracking was our total expenses. And therefore, in some instances, we get fully, some instances, they say these are enough.
So just to, if I understand it right.
Sure.
So the total COVID line.
Yeah.
Which is 3.4 million. Of that is reimbursement of 630. And how much, is there any more on that? The additional amounts that Joanne said, would that be on top of the 630?
Right, I believe so, right, John? Because you haven't had those numbers on your side. The ESSER2 and the,
So the CRF and the ESSER1 is the 250,807. ESSER2 has not come in yet because we have yet to spend it in the rescue. That's going to be right around 1.5 million coming in. And those are future expenditures. So when we did our budget this past year before it was adopted, we have estimated our expenditures for this coming fiscal year of approximately 900,000. During the budget season, when we learned about ESSER2, we dropped that budget by the 460 that we expect to come in.
Okay, and just from a control perspective, right? You've gone through obviously a process and kind of are comfortable that everything's been identified and everything's been
yes, so
asked for, and you're getting what you can get.
we are. And so one of the things that we did at the very beginning was we created specific COVID accounts across the town so that we could report on them. Everything that was COVID related was charged to these accounts. So if you bought PPEs, if you bought anything that you bought related to COVID, we were charging those to accounts separate from our regular operating accounts. That was the first step that we took as a way of identifying these expenses. And therefore, as we submit for reimbursements, we tabulate these expenses based on the criteria, and we send them to FEMA or to the state, depending on which agency is administering the funds, and then they go through and identify those. But I'm confident that we did put all of what we had
Everything in there.
everything in, because what's happening is we're getting
back the maximum we can.
we're getting the maximum we can get. And the things that aren't ineligible, they say, this is an ineligible expense, it's not covered. And in some instances, we've gone back and forth and made the case that it should. I think a good example was meals, when we were doing senior meals with the collaboration of the Board of Ed. When they looked at that, they told us that, education meals are not covered. And so we had to go back and explain, well, they're not quite education meals. We're working with the Board of Ed, the town and the Board of Ed are one entity. These are meals that are going out to seniors. And so then we were able to kind of get those expenses back in the reimbursement pool.
Do we have any idea whether this looks like about 1/5 or some 20% or something of the expenses got reimbursed?
Correct.
Is that kind of in line with others?
Yes, it is in line with others.
Other towns, their experience, so on.
Because on the first one, on the state one, it was just based, it was a dollar amount, and you got to that amount and then you maxed out, so that you weren't getting reimbursed for every single expense for the state dollars.
But it's in line.
But it is in line, yes.
And this other stuff, the American Rescue Plan, that's on top of this.
Yes. That's on top.
Right, this is other than that. This is the earlier stuff. So as far as reimbursements, the 469, you expect to get reimbursement?
Those are what we've already received.
Because it doesn't show up in the reimbursement. Receipts column. 469,000.
Oh, no, we haven't received those, yes, that
That you're gonna
we're gonna
get. So
do.
that's gonna end up in this receipts column.
Right, so the receipts column, we'll get about 530 for the storm expenses, including
So it's actually, gonna be-
indirect costs,
it's actually gonna be over $1 million.
total,
Bottom line.
yes. Joe's gonna be busy tracking all of this.
Yeah. Yeah.
Well, that's key, and then
True.
to track it all. I think real quickly, the only other thing I think we had was you had a schedule on debt, and if I understood it right, you're expecting around 100 million.
Right, so this is the same schedule that I shared with you in April, just to show where we are in terms of repayment of debt. Right now, we're estimating that, it's on page 53 of the handout. And Bill, it's on there's a geo debt schedule, so that via email. That you received on Friday. So one through June.
Do you have any idea of going forward beyond that? Or maybe that's.
Well, I mean-
Maybe that's part of what, another presentation.
I mean, there's some projects that we know of, we're having discussions about the police department, it's not part of this. We have the library, we know that that's a project that's gonna be included in.
Is that likely to go back up to 125?
Well, we pay down about $13 million annually, and therefore, so the increase would be anything over and above. And so we have about $12 million of principal repayment every year. So if you only issue 12, then you're basically staying flat. So anything above $12 million is what starts to drive the debt to outstanding debt above what the prior year was. But with the police and the library and the capital, we're probably are going to each other. Slightly over the next couple of years.
Is there any
Maybe
thought-
maybe for a future meeting, we could, I don't want you to prepare anything that you don't already prepare for the Board of Finance, but maybe just take a look at the projection going forward. And then also, I assume the Board of Finance has it, how we compare to other towns, right? It'd be just interesting to see if all towns are paying down debt at about the same rate or going up, just from an economic standpoint, or even just send it to us in between meetings if you had it. So are we gonna spend a little time here, Chuck, on the Board of Ed? That would probably be a time.
So the next cash management. I think there was just a,
Banking up here.
you guys.
Sure, so we went
you
out
and
for-
Andrew-
right.
Andrew, I think is now
And
live.
Andrew's here. We did go out for banking our request for proposals for banks, and I sent you the memo that we sent to the Board of Selectmen in reviewing those. We had 5 entities bid for services of the town, and the selection committee recommended to the Board of Selectmen, which approved, is JP Morgan. They approved it. They did. They approved JP Morgan, and therefore what we're working on now is the paperwork and the contract that's going to come back to the town. We'll have the town attorneys review it and whatnot. It is a 2-year contract that's renewable. And Andrew was part of the group together with tax collector, our controller Joanne, and we had others on the team. Tucker, our administrative officer, was part of that group, and so we received the proposals, we read them, we invited 5 of them into this room, and so we had presentations to us, we had follow-up questions specifically to operations of the town and how they could meet those needs. And we were satisfied that they could do those. Andrew, feel free to chime in, please.
Sure. No, and thank you, Linda. That was a good overview. I think for me, one of the most important criteria was, is each bank willing to fully collateralize our deposits to ensure that in the event of bank failure or any kind of issue, we are able to get all of our money back. And I was happy to see that every proposal did include full collateralization. That's something we don't have today, so that will be a nice improvement from where we currently are. I also was happy that Chase in particular was willing to negotiate on some of the rates. We were able to negotiate an interest rate floor that is more than double our current rate at our current bank. So as interest rates rise in the future, as we expect they will be doing, we'll be able to ride that roller coaster up. But at least right now, we were able to lock in a good rate. They offered to waive all of our banking fees for the first year. And also Linda, helped us negotiate getting our lockbox fees for the tax collection process to be waived in year 2, because there's a little bit of lag in getting that set up. So there will be about a 1-year delay before that transition happens. And then we're going to get a much higher earnings credit rate as well for our balances. Essentially are going to cover all of our fees anyway once the fees start accruing in year 2 of our contract. So I was really happy with the proposals. Just the technology, the interface, demos that they gave us were really, impressive. And I guess, in terms of that RFP, yeah, we were very pleased with Chase. So that's who we ultimately went with. And like Linda said, there will be a 90-day, transition plan to move our funds over there in the next fiscal year. We figured we would do that after the current year closes out at the end of this month. But that's all I have on the big RFP. Linda, should I talk about the small one as well?
Yeah, but before you do, maybe talk about, I know you had discussions with the Board of Ed on some consolidation of all the accounts that are earning fees because of the balances, and this is also an opportunity for the Board of Ed to kind of take advantage of this process. And Joanne,
yeah. Yeah, so I've been in touch with Joanne Keating, and one of the things we've talked about is a pain point of theirs is, that there are funds that are not public dollars that are raised through parent teacher conferences, other sources, cafeteria funds that are currently sitting at a few different banks that are accruing fees and don't really earn much interest. And so we were able to work out a plan with Chase where they'll be able to piggyback off of the contract we've negotiated and essentially help bring everything into Chase. But they'll have their own separate login, that there will be a degree of separation like we currently have between Board of Ed and town related finances. But the plan is to have them participate in this transition process from their current banks and just streamline, our account structure a bit. So we're really happy that the Board of Ed is willing to work with us on that. And I've been in touch with Joanne, and she's been a great partner in that. So I don't know if there are any questions on that RFP before I talk about the second RFP that we've been doing. Okay, so the second RFP, I'll be brief on this one. So we were looking for ways to earn higher interest while ensuring safety and liquidity, right? Those are the 3 parameters in our investment policy: safety, liquidity, and yield, in that order. And while Chase, we were able to negotiate a good interest rate floor, it still is quite low compared to where we were just a year and a half ago. And so we did a separate RFP to see where can we park our funds to earn an even higher rate. And we're actually gonna be working with Bankwell, one of our local community banks that we already have a relationship with. They have a product called Insured Cash Sweep, and I included an attachment on that product among the materials I sent across last night. It's just a 2-page overview of what it is. Essentially, they are a member of a network called the Promontory Intra-Financial Network. And essentially, it's a network of 3,000 banks across the country of all sizes, some large ones like Bank of New York Mellon, but also small ones like Bankwell. And essentially, they're able to place our funds in other banks up to that FDIC limit in order to ensure that our deposits are fully FDIC insured, but we essentially would only have a relationship with Bankwell. So they essentially manage a master account, and then they're opening sub-accounts and parking funds at other network banks, and in increments that are small enough that are fully covered by FDIC. And we're able to earn an interest rate that's almost double what Chase is going to be offering us, 0.35%. So, again, it's a way to earn some additional revenue on our cash while maintaining that liquidity. It's like a money market account, so we can withdraw up to 6 times a month if we need to. But I'm happy to kind of migrate into a cash holding discussion. I included a report on our current cash holdings, or as of the end of Q3 of fiscal Q3, and you'll see there that we have in excess of $70 million. So, we generally never draw down below 48, 49 million when you go back over the past few years. So we wanted to find a way to park this money safely, but still have access to it. So I don't know if there are any questions on that small RFP, but Bankwell's offer was the best one. The other proposals we got from Webster, M&T Bank, UBS, Janney Montgomery Scott, where we currently have some funds, all of their proposals came in at less than 0.1%. So this offer was more than 3 times the closest competitors. So we went with Bankwell with this product specifically.
And this smaller RFP is for basically the investing of the $40 to $70 million. So
Right, so this would be more like 10 to 15 million range. We would still keep a significant amount with Chase to take advantage of interest rates, but also to just have the flexibility to manage the cash flow.
So this is like 10 of the, whatever the number
Correct.
is.
Correct. So this would be the equivalent, because we currently have with our existing bank, we typically set aside an amount in the money market just to get
So
some.
the vast majority is with Chase.
The vast majority is with Chase. Chase will be the primary bank.
Yes, and I should add, we currently have a banking relationship with Chase, where that's where we keep our capital project monies. When we do our bonding, those proceeds go to Chase. So we've worked with the team at Chase for a long time, and we're really happy with the level of service that they've provided to us. So we are very excited to expand our relationship with them, and the plan is to keep the vast majority of our funds with Chase, fully liquid. But again, on the funds where we know we're not going to dip into in terms of spending during the fiscal year, we just want to find ways to keep earning more interest. And with rates in the basement, due to COVID and the Fed's decisions, we're trying our best to make lemonade out of lemons, I should say. And so, I'll quickly turn everyone's attention to the cash holdings and investments and interest rate trends report. I actually included 2 reports. There's a second attachment as well called FY19 through 21 quarterly balances. So I'll go through that first one, which is the Q3 holdings report.
And are you able to share?
Could you share that? Could you share that?
Sure. Let me.
Because a lot of us, I'll speak for myself, didn't have a chance to look at it.
Sure. How do I share? Oh, here we go. I found the button. Okay. All right.
Yes.
What is the name of the attachment you're bringing up now?
I'm not, oh, okay.
It's the FY21 Q3 holdings and interest rate trends report.
Got it.
Okay. Can everyone see my screen or no?
Not yet.
Let me see what's going on here.
Something's changing.
Oh, here we go. Share.
Yep, that worked.
Did that work? Okay.
Do all of
Got
it.
it.
Now what?
I don't know what
Okay.
that's, can you make that bigger and maybe zoom in on a few sections at a time if you have to?
Sure. Here, I'm going to just open up the attachment here. All right, let me zoom in. Is that better?
I could see it, I could see it on my screen, working off an iPad.
Okay.
So am I reading this right? Andrew, am I reading this correctly that in terms of the checking, we have $23 million on deposit with Webster Bank. But in addition to that, we have 56 million savings on deposit in money through Webster in a money market.
That's correct. Yes.
So we have
And the money market account is the account that is 100% collateralized, but the checking accounts are not fully collateralized.
yeah. So we have 89. We have $80 million of $100 million on deposit with one institution. This seems to me to be, I don't know, we should talk about that from just a concentration standpoint. I mean, I realize they're collateralized and so on, but it just seems to me to be a high concentration in one institution. So I think at some point, probably I'd like to better understand that.
Sure. Yeah, I mean, our general theory is, and what we plan to do with JP Morgan as well, is we would concentrate most of our funds with one institution. Obviously JP Morgan is an even larger institution, and would be giving us full collateralization across all accounts, even if we have other sub accounts, unlike what Webster has offered. But I totally understand the point. We are going to be moving some money, like I was mentioning, to Bankwell, at like a 10 million tranche over there. We won't be fully concentrated in there, but the benefit of having the money concentrated is we're able to earn more interest, and we're also able to mitigate all of our banking fees.
Yeah, but the risk,
balances.
I mean, I guess I want to step back. It's not an area of specialty for me, but given the minimal amount of the fees, which you highlighted earlier, just having such a concentration in a single institution, and a lot of it is collateralized, no question about it, but we can take that offline.
Sure. And I mean, and then the other benefits too are for reconciliation purposes, just having fewer accounts in general. But yeah, happy to connect offline further on that. So you'll see here, we divide this first page up into 3 different sections. We report on the cash in our checking accounts across the different banks, and also by account at Webster, since we have multiple sub accounts. And then we also show our savings and investment accounts and the balances across each of those banks. And then at the bottom, we have custodial funds, which are, our pension fund, OPEB. And then we show our holding summary in the bottom right quadrant of the slide. Again, this is just to give an overview of where our cash balances are currently sitting and which accounts and what their totals are. And this is a quarterly report. My colleague Josh in the finance department has done a great job pulling all of this data together. And this is a quarterly report that we're now providing to the Board of Finance, just to give them an understanding of where our cash holdings are. I'll go to the next slide. So the second slide is on collateralization specifically. So this shows the level of collateralization in the checking accounts, because just to be clear, the money market account at Webster is fully collateralized. So right now, these are the collateralization levels of our deposits in Webster's checking accounts, in our Bankwell money market, in our Bankwell checking account, because at Bankwell we have our housing authority trust fund sitting there, as well as pretty small balances at People's, and then Chase our deposits for capital projects. We actually were informed that apparently we are fully collateralized at Chase right now, that this report was produced back in April. So that is a small correction I want to note. Our Chase funds are fully collateralized. And will continue to be as we expand our relationship with them. But again, this is just to give some insight. The Board of Finance has expressed, a lot of interest in the collateralization piece. Again, because we want to make sure that our public funds are fully protected to the extent possible that they can be. In terms of interest by institution, this is just to highlight how the different accounts that are interest bearing, over the course of calendar year 2020 and calendar year 2021. Again, this is updated as of the end of March, but you'll see that our interest fell dramatically from the first part of 2020. Before the pandemic started, we were earning upwards of $90,000 to $100,000 a month in interest. That proceeded to fall quite a bit as rates went from close to 2% down to 0.1%. So as you can imagine, that had a huge impact on us. But thankfully, some of the longer term investments at UBS and Janney were invested in government issued securities, Ginnie Mae securities that extend out for, have an average duration of 3 or so years. So those have continued to earn in excess of 1% interest. So a larger portion, in the pie graph, you can see of our interest is now coming from our UBS funds and Janney, because those funds were invested before the pandemic, and thankfully we're locked in at better rates. We have seen rates improve though over the last 3 months, I would say, and now we've been able to reinvest some of our cash at interest rates around 1.2% or so in some of the government issued bonds, 1.1%. So we are seeing some uptick there again, but for most of last year it was in the basement. So again, this is just to provide some numbers for you to see in terms of our interest earnings. And then the last page.
Andrew, could you maybe change your computer? Or it just doesn't show up, but maybe it can.
Are you able to?
We're seeing page 1.
We just see
Scroll
page.
down.
You got to scroll ahead to the pages. Just scroll down to page 3.
That's okay. If you can't do it, just keep going.
Oh, are you still seeing this? Is it moving now?
Yes.
Now it is, yep.
Oh, I'm sorry. All right. I was doing a different attachment, I guess, but I thought it would just show whatever's on my screen. All right. I'm learning how this hybrid situation works. Okay. So sorry about that. So the interest, this is what I was just talking about, is the interest by institution and some of the pie charts down here, just to show the breakdown of where our interest is coming from. And the different interest bearing accounts that we have. And, so again, feel free to look closer at this offline, but these are just some of the numbers I wanted to share with you. And on the topic of interest, the last page of the report just shows how, the Webster money market rate, and Webster money market is where most of our cash is stored. Once we collect the cash from taxes, we generally park it first in this money market account at Webster, and then we'll transfer it from the money market into our checking accounts as we have expenses come due. But this just shows how the rates have fallen from 1.66% in October of last year, along with the 1-year T-bill, and how they've dramatically decreased to less than 0.1% today. So this just highlights the challenge that we're working with. But thankfully with Chase, with Bankwell, with some of these other investments I've made with UBS and Janney, we've been able to earn and exceed these low rates multiple times over, thankfully. So I don't know if there are any questions on the interest rates or on the cash holdings report.
Andrew, the point you made about it being fully collateralized is, I'm not suggesting we should, but just as a question, could we take more risk if we wanted to? Could we go into not fully collateralized? I mean, some of the Vanguards and some of the others have short-term funds which are not fully collateralized, but generally speaking, highly secure. Can we do that, or are we restricted by government code or whatever?
Right. So there are certain statutory requirements depending on which funds we're talking about. So our pension funds sit with Vanguard. They've been our investment manager for a number of years now. And those funds can be invested in equity mutual funds, corporate debt.
Right.
They can invest in almost anything. And so those returns have been better than the returns I'm showing here. This is all operating cash, and the operating cash of the town cannot be invested in any investments that are, have any equities or corporate debt involved. We can only invest really in government debt, and like other fixed income products like that. So we are restricted. In terms of collateralization, though, we certainly can put our money in uncollateralized accounts if we want to, but the risk reward we're finding is not really worth it. So that's why we're trying to fully collateralize everything. We might lose a few basis points on those investments because we want it fully collateralized, but again, that safety piece more than mitigates it for.
Yeah, fully agree. Good. Okay.
And then the only other chart, it was a different attachment. Let me share that one here pretty quickly. All right. Okay, and let me zoom in.
Which one is that, Andrew?
So this is the FY 2019 to 2021 quarterly balances. This is just an extension of the more in-depth report I just walked through, just showing the balances going back to Q1 of fiscal 19, just to show the change over time of our balances, both our cash balances at our bank accounts, but also our investment balances, just to show the full picture. You can see here that we've been we're in an even better cash position now than we've been in past years. My projection is for Q4, like as of right now, we have roughly 65 million in the bank, as of I checked yesterday. So we're probably not going to even drop as low in terms of our bank balances as we've dropped in past years. We generally never drop below 48, 49 million is typically our low point in terms of our cash before the next set of tax collections come in. So I'm really, I just want to share this just so you have confidence that we have a lot of money in the bank. We also, our investment performance has done really well in terms of our pension funds. So the equity and bond mutual funds correspond to the OPEB and pension fund investments that Vanguard is making. But you can see in Q3 of fiscal 20, which corresponds to March of last year, you'll see that we had quite a bit of a dip before it fully rebounded again. As the markets have fully recovered since the pandemic. Any questions on this?
Nice presentation, Andrew. Thank you. Good job.
Thank you.
Chuck, what do you?
I was going to say that the only other thing I just wanted to quickly mention, I had a couple of quick talking points. We are working to, implement some electronic invoicing capabilities as well as electronic payments for the town and move away from checks. And I do want to share that, with Chase, they have a myriad of tools that we plan to, work with them to leverage, in terms of decreasing the check, processing and increase, other forms of payments. So that's one exciting thing that I'll probably have more information to share on next time, but just wanted to give you a heads up that that's a current initiative we're working on. And then the electronic invoicing with Munis, that was something that Kevin brought to our attention, that other municipalities are currently doing. It does require us to upgrade the Munis system, which Joanne Noon is planning to do a little bit later this year, once we're in the next fiscal year. And it does require adding an e-procurement module to Munis. But once we have that in place, we'll be able to start actually ingesting invoices directly from vendors rather than having to manually key in information and scan and upload documents. So it will definitely make the process, I think, a little bit easier and efficient. So anyway, just wanted to mention those last two things.
Great. Good job.
Thank you.
Okay, Chuck, we're going to go over to item 5 now.
Five, I think we've done. That was at least what I'm looking at is.
We picked that up with picked that up earlier with what was it, item 3?
5, 6. I think the only thing we have left on our agenda, two things. One was the just if there's any update on the final budget and anything to do with that, and I think that'd be real quick. I think last time we reviewed everything, the only thing that was kind of open was the final determination of maybe the mill rate and how much was going to be taken from the.
Right,
general
so
fund.
the last time we met, the Board of Finance hadn't met, and at that meeting, they did set the mill rate at 18.164, which is flat to where we are in this current year for this fiscal year. And they adjusted the budget, the drawdown of the fund balance to $5.2 million. At that point, they were looking at 5.6, so it was dropped to 5.2. And you have this in on page 3 of the handout of your budget summary. But essentially what they, the reason for that was some of these funds that are coming from the Recovery Act and whatnot. Good level of confidence that we're in a good cash position and we can do the 5.2 million. And not overtax and keep the mill rate relatively.
And then the only other thing I think.
Cyber?
I'm sorry.
Cyber?
Yeah.
You were gonna mention something, yeah.
With everything going on, it would just be a good. Quick update.
Sure, and Chris is on here.
Recognizing this is not an executive session, but just a general kind of comfort level from the cyber controls.
Chris, are you on?
Yep. Good morning, everybody. Is it my turn?
Good morning, yeah, just,
Yeah.
Thank
you
you.
can give us a brief overview. I think one of our plans would be, this is Bill Perret speaking, that maybe just a couple of comments from you, and I know Joanne's been on top of cyber as well. But, you know, I will have to figure out how to do it, but maybe at some future meeting, we'd like to do a sort of an executive session or closed door session to the extent we're allowed to do that under the rules. But I just wanted to mention that before you get into it, so you don't think that we didn't enjoy your presentation. So thank you. Go ahead, Chris.
No worries. Yeah, the executive session will be great. You know, we've done that before, and it allows us to speak freely. So with that said, going forward for new cybersecurity insurance for the town, there are a few parameters that you kind of have to start with prior to, and we meet all those. We've rolled out multi-factor for all remote users, sandboxed backups, anything that's you know, checks the box for the best practice and then some. We stay current with all of our patching, all of our software servers, dual authentication for all the servers and services. We've implemented what's called clean DNS, which means any one of our users that goes out to the internet now will not be rerouted on a bad forwarded domain name. And that seems to be the trend right now too. So it helps deter a user that just clicks on a link on their email and sends it to a site that may look like, call it TD Bank, but it'll come up as td.frank without them knowing. And input, you know, then they put in their credentials and there we go. So it's all of that stuff. It's all the high-end services that we can apply to the network. We also have tools that monitor monthly. They run scans on all of the public-facing services with reports back. We've been doing that for a couple of years now, so that's really helped us tighten everything up. And we run a monthly scan on all the services internally as well. Any questions?
I think that's,
I don't know if
I think we could save a lot of it for the executive session. You know, this is a very difficult area.
Yeah. Yes.
You know, and I think, you know, as you see, even the biggest companies get hacked or whatever the case may be. And so we should talk about it. And we should also talk about it from, you know, not only from the outside, but when we get together in executive session, you know, inside attacks as well.
Absolutely.
You know, from, yeah, I'm sure you're on that. So, Joanne, you want to, from the Board of Ed standpoint, Joanne, do you have a comment or two on this, or?
as Chris mentioned, we are in the process of procuring our cybersecurity policy. We had been with Perman, they had provided that coverage for us until June 30th this year. They have discontinued it. So through the underwriting process, we've had our systems critiqued, and we are kind of buttoning up, I guess you would say, some systems that were currently, I think, in fairly good shape, but just needed some final touches to them. On the Board of Ed side, we've done a few things. We changed our firewall product, and we have 24/7 monitoring on it. We've also replaced our backup program with a rubric that does not allow anything to be written over after it's stored. And so we have another project coming up next year, which deals with our filtering. But I agree with you, we should take this into an executive session because it's really, it really speaks to our security. But just so that the audit committee knows, we have been all over cybersecurity, especially since we went remote, trying to ensure the safety of our students and our staffs and all of our administrative staff.
Yeah, and we'll try to set something up at a later meeting to.
Great. Anybody have any other matters that needs to come up? Thanks all. I appreciate your time and appreciate all you do good work. And, it's good to be focusing on good events and, protecting the town and looking forward how to build in efficiencies and earn more interest rates and refunds and so on than some of the many problems we had in the past. So I want to congratulate the town employees for the good work they've done. Thank you.
Thank you.
Thank you.
Thank you.
I think we're done. George,
I move to adjourn.
we adjourn. Second. Second.